What is going on with interest rates, right? I'm about 7 years into this, and I've never seen anything like this, what's happening ever. And I've talked with, there's some veterans in our office that have been doing this like 25, 30 years, and they're saying they've never seen anything like this either. So what the hell's going on, right? Let's just get into it. Let's talk about it. Let's get real for a minute. Interest rates have more than doubled in a year. Like it's absurd. Now again, rates were crazy low. We got real spoiled with how low rates were and just the overall state of things. Homes were flying off the market, but let's talk about now. Interest rates are in the sevens. Here's an example for you. I had a client, still do actually. They went under contract with a new construction home in January of this year. At that time, the rates were like 3.25, maybe 3.5. Well, updating to today's market, because now this home is about to be done in December, well, the interest rate has shot up to 7.5. What that did for this individual's monthly payment, now keep in mind this is probably like a $400,000 house-ish, it caused his mortgage payment to go up $1,300 per month. $1,300. That's a whole mortgage payment by itself that just got added to it just out of pure interest. So I get it. Between the higher home prices and the higher interest rates, what can we do? What are our options, right? First, let's talk about what's going on with interest rates and why it's happening. It's inflation. Inflation is absolutely killing us. Inflation is the #1 enemy of mortgage rates. And why is that? What is inflation? Let's talk about that. So inflation is basically when the dollar is worth less. That $10 today will buy you less than it did a year ago. That's not good. So what are mortgages? Mortgages are fixed rate securities. So you have to think about it from an investor standpoint, because there are people that purchase mortgage bonds, which is a bunch of mortgage loans all put together form these bonds. It's called the bond market, or mortgage-backed securities. These are fixed rate products. So if I lock you in at an interest rate of 5% today, which, man, how great would that be? If your dollar is worth less, again, this is a 30-year loan that we're locking in. From an investor standpoint, if they know that inflation's bad and that is not going to be worth as much down the road, you're losing money. So these safe bets, these mortgages-backed securities that are normally safe bets, when inflation is high, that makes them not safe, which means people don't want them. So what is it? Supply versus demand. When they don't want them, that's going to drive the interest rate up to cause less people to want them. So it will have less people getting into mortgages. And there you have it. I mean, that's the simplest explanation. With the pandemic, we had the economy shut down. We had to give tons of money to businesses. So money was flowing, right? We were pushing it out. They were printing it like crazy. Well, now that there's so much of it out there, it's not worth as much. That's what happens when you print a bunch of money. When there's nothing to back it, it gets devalued. So again, that's the biggest killer of interest rates right now. Mortgage rates are absolutely getting slaughtered because of how bad this is. We just got our update again. We're mid-October right now. We get a report called the CPI, or the Consumer Pricing Index, I think is what that stands for. That basically shows like the cost of things. And that is the #1 measure of inflation. And it just keeps getting worse. Not only does it keep getting worse, but it comes in worse than what is projected. So saying if they were expecting inflation to be at this number, it came in this higher, and that causes the market to go haywire. I'm sure you've seen the stock markets and things like that. From my end, what we focus on, or what we look at to see where rates are going to be going, is something called the mortgage-backed security, or the bond market. So this is an example of what it looks like. This is the stuff that we track. So anytime you see these little candles, where we see red and green, up and down, you'll also notice an overall curve. That curve is down. When the curve is down, rates are up. The more people that sell off mortgage-backed securities, the higher rates go. Typically, we see small movements within any given day, right? A 10 to 15 basis points swing up or down. Well, with the current inflation news, just to put it in perspective, we lost 140 basis points when that news came out. Now it bounced back a little bit because of other news coming on, but there is so much happening in the world right now, which is just causing this to go haywire. The #1 thing is that inflation. And until we get a control on it, or until investors perceive that the Fed has a control on it, we can expect interest rates to get higher. Now, the good news is I think we are through the worst of it. Again, we're here in mid-October, which means we just got the September inflation report. I feel like summertime is when it peaked, right? Summer was the peak of inflation. This is all important stuff. It can kind of help us figure out where rates are going to be. Now again, I've mentioned this past, you never want to try to time the market and find out like, okay, well, rates are up here. But what it does do is it helps with your budget, right? If you're in a tougher price point, if you're out searching for a home right now, I've had to make phone calls every time the rate goes up and be like, hey, sorry, you just lost $20,000 in buying power. Sorry, now you only qualify for this much instead of this much. Sorry, here's our new monthly payment. Sorry, you don't qualify at all now. Like, these are the conversations that I'm having due to interest rates rising. So if we're at our peak and if they're going to come down, then this is going to offer a little bit more relief and people will start getting mortgages again. But right now there's less and less people getting them because less and less people can qualify for them. So it's just bad news all around. There's no other way to say it. But I do think relief is on the way and we're getting through the worst of it. I will say when it comes to home buying, we are still seeing home appreciation. It's going to be slower. We're not going to see, massive returns. Your home's not going to be worth $100,000 more next year than it is this year. We're going to see like a 3% increase. Which is awesome. You can make a lot of money on something like that over the long term. At the end of the day, you always want to take a look at, okay, is this something that I can afford for a year, for 2 years? You want to plan on that. And keep in mind, we have options to kind of counteract that. I've got a loan product right now called a 1-0 Buydown, meaning that let's say your interest rate is 7.5%. Well, for year one, it'll be 6.5. Then it'll go to 7.5 with the hopes that in a year from now, rates will be lower and we can refinance and get you a lower monthly payment. But at least we'll know what that payment is at 7.5. So there's no risk. It's not an adjustable rate. You don't have to worry about guessing where it's going to go. We know exactly what the payments are going to be. It's just a matter of paying less for the first year. Now, of course, there's a little bit of a cost to that, but I can get you more details on that regarding the buy down options. Long story short, that is what's happening. Inflation is killing mortgage rates. They're going to continue to go higher until we can get a hold on this just awful inflation in this unprecedented time. So hopefully this was helpful. If you do have questions on this or would like further insight, feel free to hit me up in the comments. I'd be happy to share my thoughts. This is something I watch every single day. I actually call it my breakfast with Barry. So the guy that I learned from, I subscribe to a service called MBS Highway. And the guy that I listen to is Barry Habib. Barry Habib is like the godfather in the mortgage industry. He's won something called 2 Crystal Ball Awards because of his predictions. After I'm done with my workout, I pour my coffee, have my breakfast, and I watch my daily update. And Barry Habib tells us kind of the status of things, what we can expect. There it is. Inflation is a killer of mortgage rates. Until we can see a handle on inflation, expect them to get worse. But again, this doesn't necessarily mean that it's a bad time to buy. It's a little bit more expensive, but keep in mind, your home will be worth more next year and we can always refinance. So there's a fun little saying out there, you've probably seen memes all over it. Date the rate, marry the house. I love that. So thank you guys. Hopefully this has been helpful and have a great rest of the day. It's a wrap. It's almost 9 o'clock at night. I'm done. I'm gonna cocktail for myself.